Welcome to ETF Battles. I'm Ron DeLegge, and in case you didn't get the memo, ETF Battles is far more than just ETFs battling each other. Well, maybe that's the main point, but it certainly isn't the only point, because when you think about it, we're all really engaged in some type of combat, whether that's to overcome unfriendly markets or perhaps our own self-destructive behavior, and really we're aiming to deploy our money into assets that produce the best returns. It's very much along the same lines as Gerald Loeb's famous book, The Battle for Investment Survival, with the chief difference being we're not just trying to survive, we're trying to help you thrive. Today's arm wrestle is between the Invesco NASDAQ 100 ETF, that's ticker symbol QQQ, against the Ark Innovation ETF, that's ticker symbol ARKK. This is a matchup of two cocky ETFs with lots of chatter surrounding them. And although both funds own some of the same types of stocks, QQQ follows an index, whereas ARK is actively managed, meaning the manager has the freedom to pick which particular stocks they feel are best to own. QQQ, by the way, has been featured in several rounds of ETF battles, and despite its super hot performance and popularity, QQQ has yet to win against any of the ETF opponents it's faced in the short history of this program. I know it's hard to believe, but will today be different? Well, we're about to find out. Now, before I introduce our judges, keep your ETF battle requests coming and make it good. We want some battle matchup requests that have some teeth. You know the drill. Hit us up on YouTube with our comments section. Be sure to drop your ETF ticker symbols. You can also find us on Twitter at ETF Guide, and also be sure to hashtag ETF Battles. Helping us to judge today's matchup is David Kreinces at ETF Portfolio Management and Mike Akins at ETF Action, the absolute brightest and best in the business. Judges, welcome back to the show. Great to see you.
It's great to be here, Ron.
Thanks, Ron. Great to see you.
So our four battle categories are cost, strategy, performance, and then we've got a mystery category. That's where our judges can choose one factor or possibly multiple factors that they feel are important to their analysis. And who knows, that mystery category could be the deciding factor in which ETF wins today's battle. As you can see, my scorecard is ready. It's blank. That means we're going to fill it out together in real time live. And we're going to begin with the first category. It's cost. Let's start with you, Dave. You got 30 seconds. Go.
Well, the expense ratio is 0.2% for QQQ, known as the Qs, and ARK has a 0.75% expense ratio. So ARK is charging more than triple the cost of the Qs. However, ARK employs an active, aggressive growth strategy, so the higher cost may be worth it at times, but on a raw cost, I'll give the win to the NASDAQ 100.
Excellent. That's a good start. Let's shift to you, Mike. What's your take on cost? Which ETF wins?
Yeah, I think it's going to be hard to argue with the absolute cost being going to the triple Qs, but you got to point out the fact that ARK is definitely an actively managed strategy. It's super high conviction, 40 stocks versus 100 stocks in the triple Qs, and it's getting you into securities that you may not be familiar with, and you probably don't already own your portfolio. So something at the end of the day, cost is probably not a factor that should be thought of too long with these two strategies.
Let's move to the next battle category, and you alluded to it, Mike, exposure strategy. So let's stick with you. QQQ versus ARK. Talk about the differences and which ETF you think wins.
All right, so the Qs are going to follow an exchange. They follow what's listed on the NASDAQ, the largest 100 companies on the NASDAQ exchange. As history has played out, NASDAQ has tended to get more of the technology exposure companies. As a result, is heavily tilted towards technology. ARK is an innovation strategy. They're trying to find companies that they refer to as disruptors. And that's across a number of different themes that they've laid out, including health innovation, technology enablers, industrial revolution, a number of different things. So from a cost and exposure perspective, Qs are going to be broader, going to be more diversified across sectors. ARK is going to be very high conviction into a smaller number of names. Calling a winner here is tricky, but I'm going to go with ARK simply because I think it gives you exposure to something you probably don't already own. And what I mean by that is The Qs have about 40% overlap with the S&P 500 in common names. ARK has less than 2%. Qs and ARK only have about 5% in overlap exposure. So the idea here is that you're expanding your portfolio into areas of the market that you believe, or that ARK believes, have really high growth potential. So I'm going to give it to ARK on exposure strategy as an additive to your existing portfolio.
Well, that's a pretty convincing argument. Thank you, Mike. Dave, how do you see it? Who wins on exposure strategy?
So, Ron, the NASDAQ 100 tech-heavy core index holding recently became the fourth ETF to surpass 100 billion in assets. We consider the NASDAQ 100 to be the next generation S&P 500. And as for ARK, it's more of a satellite exposure as an actively managed ETF. It has somewhat higher position concentration, higher exposure to healthcare, a much more complicated investment process. So this means investors need more due diligence each year to understand the risk and reward of ARK. So on a risk-adjusted basis, I have to give the win on strategy to QQQ, given the higher process efficiency and broader diversification. But I do understand Mike's preference. I love ARK. They got great research, but I still give the win on strategy to QQQ.
All right. Thank you for your fine analysis. Let's move to the next battle category, which is performance. We're going to stick with you, Dave. Which of these two ETFs wins when it comes to performance?
So over the 6 years since ARK's inception, ARK delivered over 300% versus under 200% for the NASDAQ 100. But ARK is higher risk. In the crash this year, ARK fell 46%, almost cut in half, while the NASDAQ 100 fell 31%. Still, overall, ARK does win on performance against QQQ, which is a huge accomplishment. So bravo to Team ARK on great work. However, investors should know that leveraged ETFs are the big innovation wildcard this past decade. And the 3 times leveraged ETFs for the NASDAQ 100, technology, and semiconductors all delivered over 650%, which was more than double the return of ARK.
Wow.
But these leveraged ETFs also fell by over 70% in the crash this year. So they're all extremely volatile. And over the past decade, the NASDAQ 100 3 times, symbol TQQQ, returned 59 times your money, or 51% annualized, which was also 23 times the S&P 500 return. So the common Wall Street Jedi mind trick that leveraged ETFs are for day trading only makes no sense to me. For performance, ARK does win against QQQ for unleveraged investors, but it comes up far short against our favorite, the NASDAQ 100 3 times, symbol TQQQ.
All right. Well, thank you for that excellent analysis on performance. Let's shift to you, Mike. What's your take on performance? Who wins the battle?
From an absolute perspective, ARK has been on an absolute tear. Their themes have lined up really well, not only with over the 6 years that they've been in inception, kind of spotting the opportunities of where growth exists, but then to capitalize that, they set up extremely well for the COVID world that we're currently living in. So their performance recently has been off the charts with names like Square. Tesla's been on a roll. That's nearly 20% of their portfolio right there. So from performance, I got to give it to ARK. You got to give a hat tip to active management when it's there. Just recognize that with, big swings up, just like the leverage portfolios that Dave is referring to, you can get big swings down. If you're gonna allocate to either one of these strategies, stay the course. But I will give the hat tip to ARK in the sense that I believe it's additive to the portfolio. And I just want to stress that there's the idea of using these ETFs is using them together, right? So a little bit with strategies like ARK can go a long way. We're not talking about the core of your portfolio. We're talking about a satellite position that can add growth to your portfolio, be additive. So while I think if you give it a full market cycle, 10, 15 years, I believe that Kathy and team over at ARK can outperform Qs. And so they've done it in the past, and I believe they can do it going forward, but it will come with bumps in the road. So ARK with all those disclosures.
All right. Very good. And we were going to read the fine print after the show is done and make sure that we've got all those points. But excellent points made. Now we need to move on to the mystery battle category. This is where our judges get to pick whatever factor or maybe multiple factors they think are important to the battle between QQQ and Ark. So let's stick with you, Mike. Who wins the mystery battle, and what is the mystery battle?
Well, it's a great question. For mystery on this one, I struggled with it for a little while, and then I realized that I think it has to come down to this idea of one strategy, you're buying into a manager and that manager's team of analysts that are doing due diligence and have told you that they believe in a handful of themes that are going to lead to innovation in the future, going to drive growth. The other strategy, you are counting on NASDAQ winning business to list on their exchange, and that's the strategy you're buying. It's an exchange-specific strategy, and I think that hands down from a mystery perspective, I'm going to go with a research team putting thought into that, if you believe in that research team. And in this case, I do, versus broadly owning an exchange, which can get a little goofy based on where they win listing business in the future, right? So they won Tesla. That worked out really well. Had they not, it may not have worked out so well. So I'm going to go that mystery category being the methodology, and one being a team of analysts and the other being a team of salespeople hoping that they get the next greatest company to list on their exchange.
All right. Brains versus haystacks is what you're telling us. We got that. So let's shift to you, Dave. Your mystery battle category, what is it and who's the winner?
So Ron, before I mention our mystery category, I should also full disclosure that we are trading TQQQ and QQQ, and we do not trade ARK. But my opinions are completely objective regardless of what we're trading. The mystery category for me is always portfolio weighting and position sizing, because it's a very big indication of how these positions fit into your portfolio. And the weighting for our aggressive growth clients in the unleveraged QQQ could be as much as 100%, while a position in ARK, we would typically limit to 5 to 15% exposure if we were going to trade it. And for TQQQ, we generally cap that leveraged holding around 60%. So the win on portfolio weighting goes to QQQ.
Now we need to get your take on your overall battle winner. So we're going to recap this and give each of our judges one final chance before we declare a winner. Let's stick with you, Dave. Who is your overall winner between QQQ and ARK?
So to recap, I love ARK, especially the extra exposure to Tesla. But while ARK is an awesome ETF from a great firm, the NASDAQ 100 is the next generation S&P 500. So for me, on a risk-adjusted basis, the battle win still goes to QQQ.
Okay, very good. Mike, what's your take, overall battle winner?
All right, well, I'm going to go with ARK as my overall battle winner because I do believe in themes, and I do believe that investing across themes is a very powerful way to think about the market and find company exposure that meets where we believe the economy is going to be in 5, 10, 15, 20 years. I want to put one big asterisk on this, though. ARK is my winner if you're using it as part of an overall portfolio construction tool. You're giving it a 10% weighting, a 15% weighting, depending on your risk tolerance. If we're choosing one ETF to own and you have to own it for the next 20 years, I got to give it to Q because you're getting a much broader exposure and it's going to ride out the cycles much better. So ARK with my asterisks in standard form.
All right, very good. Well, the judges have spoke, and according to my battle scorecard, this is a split decision between QQQ and ARK. It was really the only place our judges agreed on was pretty much performance and cost, but the other categories from exposure strategy to mystery and then the overall winner was a split decision. And I really enjoyed today's program nonetheless, even though I hate split decisions, because as I've said to you before, I always like to see an ETF get beat up. But that's just me. Some things, though, that I want to point out for today's program, I guess what you might say are key takeaways. First, indexing wins most of the time, but not all the time. Next, to outperform major stock indexes, you've got to be radically different than the index. That usually means concentrating risk in just a few better performing stocks, which is a lot easier said than done. And then finally, certain leverage ETFs linked to major stock indexes like the NASDAQ 100, as Dave pointed out, have produced even better returns versus stock picking funds. So maybe that's the road to getting your market outperformance. So I don't know about you, but I enjoyed, again, today's epic battle between QQQ and ARK. And a huge thanks to our judges, Dave and Mike, for doing such a great job as always. So which ETF battles would you like to see in our next episode? Hit us up in our YouTube comment section. Give us your ticker symbols. You can also find us on Twitter. At ETF Guide is where you find us on Twitter. And until we meet next time, watch the battle before you invest right here on ETF Guide TV.